Test, test. Good morning, traders. It is 8:02 a.m. Chicago time at on the 15th of March 2022. There's some weird thing going on. Windows is just awful at handling audio equipment. For some reason, the microphone was not working and had to disconnect and reconnect. It's very, very inconsistent. Anyway, this is episode number 2191. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick reminder, FOMC tomorrow. Big FOMC tomorrow. The expectation is the committee will raise interest rates by 25 basis points in an attempt to cool inflation, consumer inflation. Commodities and energies are dropping hard. The crude oil was down quite a bit, has recovered a little bit. Crude was down to 93.54. It has recovered basically $3. It was down as much as 9%. Really big move there. We're seeing the same across other commodities. You can see the metals are also dropping relatively strongly. Gold is down 35. Gold has also recovered. Was $4 lower earlier today. Silver, copper, same thing. So that's really important to note. That really helps the market take on a bid, in my opinion. Chinese stocks taking a beating. Hong Kong was down as much as 5% this morning. I believe Shanghai is down about 2.5%, something like that. So that's been going on in the background. Keep an eye on those Chinese stocks. There's been quite a lot of movement in there. Of course, also we see volatility in Europe. The Eurostoxx 50 were down as much as 2.7%, I believe, at some point. They've recovered already. The DAX about the same. The volatility across Europe is tremendous. These products don't generally have 2.5 to 3.5 point swings day in, day out. So these are all things that show or price in underlying weaknesses and overall concern and fear in the market. So despite what seems like a pretty well-controlled sell-off, this is still a pretty decent-sized correction here as we're trading in the S&Ps down in the 4,100 handle. The most recent low in the June contract is about 4,100 even. We're at 4,187 currently. The calendar has several items on it. This morning we did get the unemployment rate out of Great Britain, came in pretty below expectations, which is better, 3.9% versus 4% for unemployment. Claimant count 48.1, which was higher, negative 48.1 thousand versus 25,000, negative 25,000. So that's better as well. Inflation numbers out of France, the zoo economic sentiment out of the EU, but also importantly, the German zoo economic sentiment index at negative 39.3. Wow. Versus the consensus of plus 10. We did get PPI this morning, not really a mover. PPI came in slightly better at 0.8% versus 0.9 consensus. Core PPI came in at 0.2 versus 0.6. So those numbers are better, but PPI isn't really in the on the important list right now. For those of you trading the euro and eurozone products, remember that the ECB's Lagarde is speaking at 11:15 Eastern, and then this evening Japan has balanced trade at 7:50 p.m. Eastern U.S. time. Remember that we flipped the clock forward, that we sprang forward on Sunday, so the time difference between Europe and other countries and North America is a little bit off until Europe catches up and the rest, some other countries catch up. Usually, I don't know. Does Europe switch this coming Sunday or 2 Sundays from now? I didn't look that up. I know one switches 1 week before and then the other switches 2 weeks before, just to add to the confusion of things. I don't know if spring is 1 or 2 weeks behind for Europe. As far as the S&P, the S&P has a multi-distribution profile. It has a V bottom, a lot of price discovery, 252,000 contracts traded, which actually is quite low. This is above the mode, but it's quite low for the type of range that we have and for the fact that we are rolling. So this is remarkably low volume given that we have tested below last week's low and bounced back up. Inventory is quite even, and the range is 65 points so far. Point of control at 41.68. The high at 94.50 and the low at 29.50. The prior week low around 44. So that's what's on deck. Here's what, just really briefly, here's what was expected yesterday. Yesterday, expected on scenario 1, follow the green line, follow the yellow brick road, and in this case, follow the green line. The green line was looking for us to push up into 42.26.5, somewhere around there. That was the key over-under level for the session. Again, 42.26.5. And then we were looking for a drop into the magnet, which was 41.89, bounce back up, break the magnet, pull back to the magnet of 41.89, and then push down to 41.50. That was the plan for scenario 1 yesterday. Here's what actually took place in our review segment. We open up, we drop, nice little short here. We dropped, the runner ends up getting stopped above the mid. Then we consolidate, we hold the mid. We have a mid setup right here. We hold the mid, and then we push, we squeeze the opening swing higher. The opening swing is there and there. These dashed lines are the opening swing lines. This is the first high and low swing. And then we break the opening swing. We pull back, again, to VWAP. We break the opening swing, and then we pull back to the full session mid. So there's a RTH mid setup, full session mid setup. We end up pushing the IB through almost to 42.40, much higher than the 26 expected. And then from there, it was a very, very concentrated and persistent push to sell off. So you can see this rotation here is down, negative rotation of 45.75 points. This looked like it was news driven all the way down. So that's this portion here. And then it pulled back just 7 points and continued for another 18.75 points. And then once that was complete at about 12:15 my time here in Chicago, all we did is we built a box for the rest of the session. So we built a really clear box here that we traded inside of for the last 2.5 hours or so. There was not much to do here. This was really a messy kind of a trade in here. But earlier in the session, it did give some really decent pullback. Longs and breakout shorts as we separated very much from the VWAP for the session in mid. And what we ended up with is a multi-distribution profile here for a neutral extreme down day. This is a neutral extreme down day, picture perfect. And so what you have here is the market breaking the IB high, then breaking the IB low. So there we have neutral, closing in the lower quartile. So that makes it an extreme. And then because it closed down, it's neutral extreme down day. Okay, with the point of control shifted to the low end of the segment, this tells us that we're very likely, high probability, somewhere historical probability in the 88% range. Again, past performance is not necessarily indicative of future results. That we are likely to push this low. Like yesterday's low was actually a double TPO low. So it was a weak low with a neutral extreme down. So this is very likely to push lower. The overnight session did not disappoint. We opened back up. We attempted to push higher. This is the top of the box here. We attempted to push that, and then we took out the low, and you could see there's quite a bit of volatility here. The European markets open, they push up, push down, and we extend to 29.50, and we put in basically what is a V bottom or a sharp bottom back into yesterday's mid at 41.96. So it's a very noisy, very choppy kind of trade. You can see the delta went negative and positive, and again, the delta is not really reliable during roll because of rollover. There's a lot of hitting and lifting that takes place simply for the fact that people have to move from March to June, move their positions from March to June, and that contributes to the fact that the order flow is not entirely orderly. That should come to an end tomorrow, and I have the pace of roll. While we're talking about it, I have the pace of roll chart here, and it looks like we're 77% done with the roll. We're pretty much on track to be done by tomorrow. So after tomorrow, or at the open tomorrow, we expect that the roll will be about 99% done. Expiration continues. The expiration trade continues, and the expiration trade has a lot to do with delta hedging, which translates into gamma type hedging, gamma movement, options convexity going into Friday. We have stock options expiring Friday. We have futures expiring Friday and options on futures expiring Friday. All happening, and that's why we call it triple witching. Quad witching used to be single stock futures, which don't really trade anymore. But overall, the business of rolling is likely to be done by tomorrow's session. This is a very technical thing about futures that I want to make sure you know about. The business of rolling is likely to be done, but then there's still the business of delta hedging and gamma hedging to carry into Friday's close. Much of that will be done by Friday's open because a lot of those options expire at 8:30 Central on Friday, at the cash open on Friday. But deliveries and assignments occur all through the weekend, and those participants will continue to monitor the positions and will continue to adjust their position all the way into Friday's close. And then we're done with that mess, which happens once a quarter. We're done with that mess by Sunday's open. So that's where that stands. Back to the review. What we have here is relatively bullish behavior. We poked and we stuck our hands beneath the surface of yesterday's low, beneath the prior weekly low, and we found buyers. And so this is attempting to climb back up over the 4,200 mark, and we may see some buying coming in here as long as crude keeps doing what it does. We're also seeing a bit of a turn In treasuries. Let's take a look here at Edge Pro X. We see a bit of a turn in treasuries. You can see them peaking up a little bit. This is a 4-hour chart, both the 10 and the bonds. So there's a little bit of relief on the yields, but nowhere near what it would take to make a dent in the fact that yields have really come up recently. But we're seeing that the bonds and the notes are getting bid a little bit as crude is falling. So we see crude and natty gas both dropping off today, and we're seeing a bit of a bid in the S&P, the NASDAQ, and so on. We're still well below those monthly VWAPs. As a general indication, I prefer not to use moving averages, but I do like the VWAP because it is a volume-based average, and it makes a lot of sense to me, being as someone who has been using volume profile since 2005, 2006. It just makes sense to me overall. But we're still relatively weak. We still have a lot of overhead resistance to run into, be it the NASDAQ, the Russell, the S&P, or the Dow. We still have a lot to contend with up above. Looking at yesterday's action, let's look at the TPO chart here. We could see that, like I talked about yesterday, we could see that really we have been in this balancing box where we opened yesterday, and overall we attempted to push higher into this point of control from Friday, and then we ended up selling off in what was a double distribution profile, 2 distributions yesterday with a double TPO low. We are likely to want to come back to this magnet at 430, or a TPO magnet at 430 up above, which is what I'm expecting today. I'm expecting us to kind of put a bid in. We are already above the neckline, the single print from yesterday. Down here, we're already in the upper distribution, so we are likely to continue to push back to that 42.30. That's what the TPO chart shows. But if you look at the TPO chart overall, you can see that it's pretty much in balance, right? We've got this low from way back on the 25th, which has a 4100 low, and we've been trading just back and forth sideways since then. So in my opinion, we are just, it looks like we're selling off. Like yesterday, we had this really large move down, but overall we are just being frantic. The market is frantically pricing trading or auctioning in the same range repeatedly. So it is trying to base, believe it or not, it is trying to base, and we have a higher low yesterday to the low from last week, which has a higher low to the low from a couple of weeks ago, again, February 25th. So that's the bigger picture of how things are laying out. On this chart here, again, a reminder, the blue is the day session, the orange is the overnight session, and you could see that we go down, we push higher, then we push lower, then we're likely to push back, and so on and so forth. So to me, this looks like it is just going back and forth. This morning, the magnet's down here at 41.47. We're above the magnet. We're actually above the over underline. Let me make the cloud notes a little bit brighter. There we go. The cloud notes a little bit brighter, and you can see this is the over underline right here. This is the over underline. This is the magnet. This is key support down below and key resistance up above. So key resistance is expected at that 42.26, 42.30 area, and we are trading right in here right now. You can see it's 41.90, and so We are above the over underline. I'm looking for this thing to really catch a bid and start moving back to 42.30. That's the main expectation for today. So let's get into that and take a look at what's expected for today. Where is my VWAP? My VWAP. 1 second, please. There it is. Okay, so what are we looking for today? Expectations. Sorry, there's just a lot of stuff to click on and handle. Expectations for today. For a primary scenario, it is pushing up against the overnight high right now. I'm expecting this thing to respond a little bit. I'm expecting a pullback to around 41.80, 41.70 right in here. Right in here. I'm looking for support in this area in the over underline and the structure that was left behind from yesterday. This is a low volume structure. You can see it from yesterday's action. You can see it today. I'm looking for this thing to pull back a little bit to this 77.80 area. And then to come back to the open, and I'm looking for it to squeeze through the 4,200 and push all the way to resistance at 42.24 and potentially 42.30. So that's scenario one. The map shows 24 to 30 as key resistance. I'm using 41.77 as the over underline. This is the important number right here. And if it gets below 41.77, then it shows that buyers are not really able to hold prices, and we are likely to start squishing down. So I'm looking for about 50 to 55 points of range to the upside. If it does not, if it pushes through the 24 to 30, especially the 30, then we are likely to squeeze all the way back up to 42.51. Right up here. That becomes the next key target, and that gives us the wide range, statistically widest range that we are likely to have today. That's the first scenario. The second scenario, so you've got a bit of a price map there and a plan. The second scenario is an open that pushes that high, gets into the 4,200, 4,203, attempts to hold, and then like yesterday, we get an impulse down back to the open, and then we're likely to test the 77, push through, pull back to the 77, and now we're back in our magnet. We're pushing back to the magnet. The magnet is down here at 47. That becomes the target. So above, we're looking for 05, 05 to 07. And then once it breaks through, the 77 becomes important. And if it breaks through the 77 and that becomes resistance, and it's sell. I'm selling pullbacks, looking for 47 on what are really high risk factor trades. And I'm not expecting it beyond the 47 in this scenario. So I'm looking for about 60 points to the sell side. That'll be scenario two. Now remember, the idea here is not to, and I know you guys have heard this again and again, but I want to make sure as more and more people are watching these videos, the idea is not to come in here and tell the market what we want it to do. The idea is to plot out what could happen so that we can react to it. So if I come into the day, and I know all of you have had this experience, everybody's had this experience. You come in and you're like, okay, some guy said that it's going to rally to 4,400 from here or whatever. And then you're sitting here and then the market starts trading and immediately our minds go fuzzy and we don't know what to look for. Whereas somebody who comes in and says, well, if it pushes this way, these are the key areas up above, and I'm looking to lean against this key area for a long to this key target. If it does not and it starts to sell off, then I'm looking for it to break this important area. And those are the bands that you see on the screen, the gray and the colored bands. If it breaks this area and then holds it, then I'm looking to get short for this target. And then what happens is when the market starts trading, you're not sitting here going, well, gee, I don't know. It looks, I don't know. The book is bid. There's strong bids and it's trying to push up and there's sweeps down. None of that noise happens. And that's the biggest thing to deal with when you're in stage 2, stage 3 of competence, where you don't know what information is important. You're trying to drive. Should I be watching the speedometer? Should I be watching the front of the car? Should I be watching in front of me? Should I be looking at the mirror? Should I be looking at the side mirrors? There's too much information, but as time goes on, you start to see where the pieces fit, and your focus is to look outside and be fully aware of what's around your car and what direction you need to move, and you start selecting lanes based on the direction you want to turn. And so that's what I'm trying to get you to do. I'm trying to get you to just look down the line. Anyway, we're opening in about a minute and a half. Good luck, everyone. Make sure you have a map and a plan. Without a map and a plan, I'll take your money and everybody else is happy to take your money. Be smart. Be a trader. Take care.